Let's actually move on and talk about a very interesting note that came through. This is from CLSA and they're talking about electric vehicles. Rima, they're sounding extremely bullish on this space.
Well, I don't know how many, at least I have debated whether it's time to switch from an internal combustion engine or to an EV, right? And I'm sure a lot of our viewers must have thought that as well. But you hold back because upfront you have to pay a lot more to acquire an EV car versus your regular car, right? Say a Tata Nexon EV versus a Tata Nexon petrol as well as diesel. So CLSA has done some analysis and they're saying that the break-even, okay, which means the cost of ownership, the increased cost of ownership minus the amount that you save on your fuel on an annual basis, the break-even is about 2 to 4 years on an average. And here's the analysis that they've done. So first they've taken the Nexon petrol versus the Nexon EV Prime, right? And here they're saying the break-even is close to about 3.4 years. If you take the higher end, then the break-even is about 5.5 years. If you move on now to the diesel version, right? This is the petrol version. If you move on to the diesel version, this is actually not giving the easier picture. If you could just pull up the break-even chart of what it takes, there you have it. For the lower end variants, it's about 2 to 3.5 years. If you go for the premium end variants between petrol and diesel, it's close to about 5 years on an average. So that's the key takeaway, right? The break even, if you want to switch and you buy a lower end EV version, whether it's petrol or diesel, then the break even is as low as 2 to 3.5 years. So which is why they're saying the rise of electric vehicles is going to be inevitable in SUVs. And here they've done the analysis of Tata Motors Nexon as well as Mahindra's XUV 700, and they're saying that because the break-even cost has been, the break-even period has been coming down now, the switch to electric vehicles is going to happen at a very rapid pace. So they're saying 25 to 30% of the SUV segment will shift to electric by FY27 to FY30 on an average. They believe Tata Motors and M&M are likely to lead the race in electrification of this whole SUV segment as they are the first mover advantage. They're launching 8 to 10 new models each in the electric segment over the next 5 years, and they are spending close to about 100 billion rupees to 150 billion rupees over the next 5 years for the electric vehicle cause. And they believe that between the two, they will command about 65% of the market share by FY27.
All right, very interesting report there from CLSA on EV. So they're sounding quite bullish on this entire space. By the way, important flashes from Dr. Reddy's on the bottom of your screen. One of their arms has stopped sort of clinical trials for one of their drugs, which was an oral drug meant for psoriasis. So they've stopped that, saying that it's not going to really help moderate to severe psoriasis. But with that, we're going to get into a short break now. When we come back, we'll discuss market fundamentals. Vikas Khemani of Carnelian Capital Advisors will be with us.